Joining us this morning, JLL CEO Ulbrich. Christian, it's great to have you back. Talk to me about what's positive long term in a time where people are arguing return to office is a structural step down in the need for office space.
Well, what we have already seen over the last couple of weeks, that people are returning to office. So occupancy in offices are growing all across the world and also across the US. And we shouldn't dismiss office buildings overall. It is the place for meeting and working and engaging with your company. And so I'm pretty sure that offices have a big role to play going forward.
You know, it's funny, the Information news service has a story today about Meta, for example, where they reportedly have brought in a DJ to convince employees to come back to the office. I mean, you're not seriously expecting 5 days to become the standard anymore, are you?
No, definitely not. We would expect that the standard will be probably going around 3 to 4 days a week, depending a little bit what industry you are in and what role you're playing within your company. But around that 3.5 days will probably be the average in the US going forward.
So aren't we looking at a situation now where in 12 to 24 months, a company can say, we've got 2/3 of our people back on any given day. We can afford to let go of a third of the space in our urban centers. What makes that unreasonable to think?
Well, first of all, companies have to decide whether they have assigned seating or unassigned seating. If you have assigned seating, it doesn't make a difference whether your people come every other week or whether they come 5 days a week. You have a seat for that person. So companies first have to move to unassigned seating to reduce the space for work desks. But then usually what we see when they reduce the space for work desks, they're increasing the space for meeting, for engaging, for innovation, for well-being. And so it's not necessarily the case that they're all downsizing the space they're using. Most of them are actually upgrading the space they're using. They're trying to move into better buildings. So it's not necessarily the DJ, it's better space.
Yes. We were just talking about the relationship with banks, and there is this thesis that corporates are going to diversify their deposits. I wonder if you think that theory is overdone, given sort of the friction in establishing new lines of credit, establishing new relationships with additional bankers. Do you think people are overthinking it?
Well, listen, you know, the situation of SVB was very unique because they had in their business model that startups had to bank with them and in most cases had to bank only with them. The majority of corporates do have different banking relationships and not only one banking relationship. And if they feel that their banking relationships may not be strong enough or the banks may not be strong enough, they may diversify some of those. But I don't think this is a broad theme in the corporate world.
There have been some calls on office REITs today. For example, on the sell side, Deutsche's got a report out today. And part of their argument is, you know, we think the sell-off is overdone, but we don't have the transaction frequency to make a longer-term call right now. You think that frequency is going to heat up in the back half, yes?
Most definitely. What we are seeing is that a lot of the private equity investors are ramping up their kind of look into the office market. They will probably enter the office market over the debt side and then later move into the equity side. But what we have seen over the last couple of months is that prices have been taken down across the board, no matter what the quality of the buildings is. And now people will become much more granular again. And great buildings will have a usage in the future, and they will also trade, and they will trade at reasonable prices. And so capital is lining up for that already.
Christian, you and I were on a panel together in Davos at the beginning of the year, and it was a bleak time for real estate because interest rates had risen so much, and there was a lot of pessimism. I feel like it has gotten exponentially worse as a result of these banking problems, as a result of people realizing that these loans are starting to come due. What do you think is the biggest misconception out there?
Well, I don't necessarily say there is a massive misconception. What people have been doing because the market was getting very nervous is that they were treating everybody the same. And now as the dust is settling a little bit, then people are back to seeing who is really strong, who has really strong buildings in their portfolio, what are the great developments. And those will kind of be differentiated now massively against those products which are actually having a problem. And there's no doubt that a lot of office buildings, which we would call commodity offices, do have an issue going forward. But that doesn't mean that the whole market has an issue. And therefore, I think that bifurcation of the market will become much more visible again going forward over the next couple of months.